do I want to zoom, zoom, zoom in a boom, boom, boom? Noise, 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 volatility. I'm gonna run through the indexes again, just to make sure that we know where the sentiment, where the feeling is expressed in price action. So forget all the noise, forget G20, forget Fed, all that, forget it. Garbage. Let's just go back to the price action, how the market's digesting all that news. 3 positions possible. Long, you're in a stage 2. Abstinence, your cash, you're in a stage 3 or stage 1. You're just waiting for a breakout or breakdown. And stage 4, you're shorting. Let's go through the monthly. China. I'm going to go through all the indexes, all these. Yeah, it's worth it, guys. It's worth it. You'll get the feeling of the whole world, what's happening right here, where the synergy is happening, where the indexes in the other places around the world have been going down. And when the US markets are starting to go back up, they're slowing down their descent, only to play catch up and then in harmony continue a leg down when the States brings everybody down with them. For then that next and probably final leg down, just like in 2008. With the sectors within the SPX, some sectors had already broken down. And after that, when the other ones were still going up, some of them were having legs back up. And when those final sectors, the last ones that were still in stage 3, finally broke down into a bona fide stage 4, all the other ones that were already in stage 4 deepened their stage 4. Harmony is attained right before the end, guys. Before that, it's erratic, mixed signals. Index is advancing, some not. Some stocks going this way, that way. But that last leg down, when there's that final big move, there's harmony attained, that big catalyst, which none could avoid, or barely, some exceptions. And after that, it all coincides with that final climax of everything going down at the same time. That's when you have CNBC hitting the panic button. That's when you have all the news. But until then, you have some leading stocks, leading indexes in stage 4, some not, and you got to wait for that harmony to happen, but we're not quite there yet, but getting there. Okay, 12-month moving average going downwards. That's a previous high. We haven't reached that for a while. Months have been ticking, really going downwards. Price action was all up this month, but the sellers came back in, brought it back down, and now we're even close to lower bottoms. Okay. So China, definitely stage 4 right there on the 12-month moving average. Taiwan. Previous high here, multiple months, sideways move, big red candle. And now we have some indecision right here. Move. Time measure move was reached. Buyers coming back in, and now we have a doji or spinning top. Buyers in control, sellers in control, and now we're just deciding where the next leg's going to be. 12-month moving average going downwards, guys. You do not want to be in the stock. You want to be in the stock. You do not want to be in the stock when you're below 12-month moving average, because this could happen. You want it to go sideways, and when the price action starts closing like this candle right here above the 12-month moving average, then you could start considering it's part of the weight of evidence. It's like Stan had the weight of evidence, but there's some do nots. So no matter what the weight of evidence is, on the 30-week moving average, on the weekly chart, if you're below, price action is below 30-week moving average, you do not want to be in the chart. No matter what, you do not want to be there. And the inverse. If you're above the 30-week moving average, you do not want to short. I'm applying the same thing here, but on the 12-month moving average, to get that higher trend, some stage analysis on the higher trend. The 12-month moving average is going downwards, the price action is below. You got to wait, guys. Anything you're doing here is picking bottoms. Because that 12-month moving average, even if you have a stage 3 or 2 breaking out on the weekly, it's going to be stage 2, 3 on the weekly, but you still have the pressure of that 12-month moving average, and that's just going to be the stage 2, the uptrend. on the small time frame, but then getting brought back down by the higher prevailing trend, guys. There's stage 2s on all types of levels of time frames, and the smaller the time frame, they're just moves within the higher time frame, guys. Okay. Okay, Taiwan, we did. Singapore, same thing, 12-month moving average going downwards. Breaking down, going back up, sellers coming back in. Sideways move. That's probably going to look like a stage 3 or some bullish action on the weekly. But if you go on the monthly, you still see that that's just the 12-month average is still starting to go downwards, guys. You're going to need some price action going sideways for a while, just like here. And then you go back up. Not quite there yet. Netherlands. And all these arrows, all these lines. Remove all drawing tools. Okay, previous high. I like measuring that. See how many months we're running before we hit that high again. So you see buy and hold, guys. The high is here back in those days. Or even here if you sold. It took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 months. Buy and hold. Suffering, pain, not sleeping at night. Doesn't make sense, guys. If you're below 12-month average, get out and you wait. Below 12-month average, buyers coming in, and here indecision again. It's just waiting for some more outcome, but you do not want to be long. Netherlands, you're below the 12-month average. Japan, just did a high recently. Not breaking down yet out of this monthly defined support, stage 3. So you do not want to be long until you get that close above that 12-month average. That's just the first clue. Until then, you can't even consider being long Japan. Do you want to short? No, not yet. I want to close below that 21,500. Until then, let the buyers and sellers figure it out. And you're seeing all these candles for the month of November. It's a big fight right now. Hong Kong. Ooh, that one hasn't been a long time. Hasn't had that beat that high. Whoa. Move all drawing tools. Just reset that. Below the 12-month moving average. Do not want to be long. Pulling back. So if we did go on the weekly, this would probably look like a nice pullback on the weekly. Let's just go look at that. You see? Nice pullback on the weekly. Going down, broke down below the Ichimoku cloud, underperforming the SPX. And that price action, the last 3 or 4 weeks that we saw in November on the monthly chart, that's the pullback right here. So when you see those green candles on the monthly, actually they're giving you a sign that if you go on the smaller time frame, you're probably catching up to a good risk to reward entry. You're probably getting, where's my line? Patrick, where are you doing? Okay, chart line. You're probably catching back up to a previous support and resistance. You're letting a 30 moving average catch. This is actually giving you a good opportunity when the price action starts going back down. That was a good place to enter short, guys. Green candles on the monthly when you're in a downtrend. Go look on the weekly, and that's probably going to give you a good risk to reward entry. Move all drawing tools, NASDAQ. Where's your last time you had a high? I think it's here. One this month. High, 76.95, 76.91. Ooh, 77 October. Crazy action. Line in the sand for the NASDAQ. Buyers, sellers, crazy fight below the 12-month moving average. It's still going upwards, but you do not want to be in the stock if the price action is below 12-month moving average. So this November month is going to be important. If it closes above or below, very critical, I think, for the next move for the NASDAQ, guys. Until then, that's probably some Ichimoku cloud you're in right here. Yeah, that's it. So you're starting to go through those lines of defenses, right? Those weight of evidence stuff we look at. Price action is a long time now below the 30-week moving average, not super duper, but that Ichimoku cloud helping you go back up. So you're just going to have to wait. You can't go short right now, but you don't want to be long NASDAQ. Right now, it's just danger territory. You got to let the market figure what it's going to do. And this candle is perfect representation of that. Buyers in control, sellers in control, go back in the middle. Europe 50, man, broke down. Almost close to this support right here, this big bottom. Again, some more indecision. They're waiting to see what's going to happen. Is it going to continue to leg down? Go back up. Lots of indecision here. Do not want to be long. This is either you were short and you reach your target, or you're on the sides, on the side, but you're not going long here. Sideways move right here. Consolidation pattern. Could easily go back down, and if it goes back up, you might have a chance to get a good risk to reward ratio, guys. Right about here, and then continuation down. As long as you have the 12-month moving average going in your favor, that's the direction that you should be playing on the smaller time frames. Make sure you're not contradicting the current. Man, drawing tools, chart morphs, guys. Always redraw the lines. No problem there. 12-month moving average going downwards, starting to go down. This looks pretty much, the charts, they look pretty much the same. They're starting to be in harmony, especially the European charts. Indecision, and especially November. A lot of harmony across the world for the November month. Consolidation pattern probably on the weekly. And eventually either you get a chance to go back up here and play continuation short off the 12-month moving average going downwards, or a continuation breakdown, and you might have a chance to reach these, go back to these lower lows right here. France. Oh, France. I want some wine. All right. That's the last time it reached a high. Well, super well drawn, monthly defined. Breakout resistance right here, support right here. You broke down below it. You had a multiple, you had some here, 4 months breakdown pattern, giving you a target going through 6-7 months consolidation sideways pattern, and now you're actually below. After having October close above that breakdown line, November is right below buyer sellers, but right now the sellers more in control than the buyers. If it closes below that, then that should be going down. Where's my measure move? November, man, an important month. I don't know how many days left, but that would be a nice short right here. Using my classic chart trading framework, bring you down here. Not much support, not much noise, turbulence on the way to that target, guys. SPX. Ooh, okay, SPX. That's the SPX. My line in the sand, 2630. This is the high. Dip below, went back up. Dip below, went back up. Buyers, sellers fighting again. The price action is still below the 12-month moving average. The more it stays below, the more that's going to start to flatten and the trend's going to start to change. Right now, again, that's one of the, you have to be on the side. You have to be cash versus the SPX. You do not want to be long, danger zone. You do not want to be short. You want to wait until you get that close below the 2630, guys. If I go on the weekly, yeah, see that you're hitting that monthly defined support. You have that Ichimoku cloud serving as support. It barely had a close below here. Not convincing enough. So giving SPX some breathing room. The more the price action is below 30 average, the more it's going to start flattening, going down. Definite stage 3. Looking like a top. Look, I'm looking more at the scenario of a stage 4 breakdown because you see, as I went through all these indexes, they're in stage 4s on the monthly. They're consolidating on the weekly, either pulling back, giving an opportunity to short because the higher time frame is going down. I'm closer. I don't mind changing my mind. If the SPX one day decides to go back up and beat those highs, 2920s, then I'll be imagining a stage 2 continuation breakout. But until your 30-week average, you're below it. Remember, stance commandment, do not be long a stock if you're below 30-week average. So until this breaks down, this is definite solid stage 3, but closer to a stage 4 right now. So we're focusing on that, see what levels you're looking at for it to break. And if that's not going to happen, then you have to just wait and stay on the sidelines for now. Cool. Monthly. Russell. Come here, Russell. All right. 2 months since the previous high. Pad measure move. We're on that line. What's that line? 15. Yeah, 1700. 1700. No? Here, on this line here. 1508. 1510. That's a breakdown line on the monthly. Same thing as these other charts, guys. They're all below the 12-month moving average. Am I correct in saying that? This is NASDAQ below. Yeah, they're all below the 12-month moving average, except... No, they all are. Even Japan is. That's pressure on the downside, guys. So until we have that close, very close, again, buyers and sellers fighting it out, duking it out. Give it maybe another month to figure it out. Hitting that Ichimoku cloud defined support below 30-week average. Looks like a stage 4, guys. But not, you just want to make sure out of the cloud to have a clear coast to increase your chances of going down to your target. Until then, this might actually, the cloud might, see how it's going back up here? Might actually bring back the price action back up here and then test that 30-week average, test that previous support turn resistance. So that's why it's hard really to overcome those highs on the monthly, because the monthly is composed of many weeks, and usually you're going to have a top formation on the weekly when you have that high on the month right here. But all this activity here during those weeks, support, turn resistance. So it's really, really high to overcome those highs. You have to go through that damage, that previous support and resistance. Then you have the 30-week average bring you down. Hard stuff, man. So that makes it starts to look like a left shoulder, head, maybe right shoulder here. Hard stuff. Hard stuff to go through. All right, guys. It's a long one. Almost done. Wall Street. I think this is Wall Street 30. Not quite sure what that composes of. Ooh, above the 12-month moving average. Okay, that one's the strongest there. A lot of fighting, lots of indecision. Previous high right here. Definite. Ooh, barely stage 2, still on the monthly. This is a nice stage 2, guys. So there's qualities of stage 2s. There's beginning of cycles of stage 2s with launching patterns, launching pads after stage 1 consolidation. And this, when you start seeing the volatility, usually this signals the end. It's almost the end of a cycle where all this is damaged and churning and the market doesn't know what to go. So there's qualities. Stan says it's good. Play those stage 2 breakouts, and after that you could have stage 2 continuation breakouts. But when you're far advanced, or when you're advanced, these are monthly candles, guys, advanced in the stage 2, you got to be wary of the end when you're starting to catch up, when the 12-month average starting to, or the weekly average starting to catch up to the price action. You don't have that buffer anymore. Getting close, and then whoosh, go down. So you don't want to be long. This is a definite start of a stage 3. Technically, probably not in a stage 3 yet, but super dangerous right there. And if you have the weight of evidence of all the other world indices, then you should be wary that you should not be in there yet. And that's how it looks. It looks on the weekly. See, on the monthly, you should barely be there, and on the weekly, you're below 30-week average. really hogging it. That Ichimoku cloud defined support really keeping this afloat. I don't like these big red candles. So until you're out of the cloud, stage 3 churning could go up or down, but unless I get a close above 26 720 or 17, you want to be on the sidelines for that one, guys. So we have some shorts, we have some no longs, some stage 3s, and I think those stage 3s are going to be stage 4s eventually. I think they'll be stage 4s before they'll be stage 2 again. And those stage 4s are going to be, we'll have opportunities to short them again on pullbacks. Okay, let's go, guys. Almost done. 12-month moving average going downwards, price action below, hitting some monthly defined support, drawing out possibly a top. And guys, until you overcome this, until you go back all the way above the 12-month moving average, and after that above that 63.53 level, we're far away from a bullish scenario, guys. You want higher highs, right, to confirm an uptrend. So the next time you have a higher high, man, it's going to take a while. Or we're not there yet. Could be fast, but we're not there yet. And when you have the weight of evidence, not looking for that yet. UK, treading on that monthly defined breakdown line. Price action below. Buyers, sellers fighting it out. Let's see if that just becomes a wick in the noise, and they'll need a little bit more time before breaking down. On the 30-week average, on the weekly chart, 30-week average going down below the cloud. Consolidation pattern right here. This actually could be eventually something like that could happen. So we have to wait for that. They look alike, guys. A lot of there's like different classes, right? There's some that look pretty much the same. Some have already broken down. Those are the 4 stages, the 4 categories. India. And all my scribbles once again. Going down. Oh, that one's going back above. So after being below 12-month average, this one's back above. That's a stage 3 type behavior on the monthly candle chart. Here's the line in the sand. You have the wicks below. Until you have a close below that, I don't think you want to be shorting this. And until you get you beat those previous highs, have higher highs, you do not want to be long. So that is a push, a sidelines for the Nifty. Right here. Ooh, testing that. Testing the 30-week moving average. Ichimoku cloud support, bring it back up. So that's it, guys. That's how we are today in end of November. There's a lot of work for those whole indexes to start picking up, getting out of their stage 4s, basing. But for a lot of these, they're Europe's and the Asian markets. They're already in stage 4s. They're probably going to bottom before when we start. I don't know. Maybe they'll bottom before us, before the North American markets. But they're still far away from those moving averages. Still way down. Still going to need a lot of churn. All right. That's it, guys. Enjoy.